So a supply zone is essentially a bearish point of interest. It is a bearish POI. And the reason it's a bearish POI is because of three things, right? A bearish POI needs to break structure. It needs to be priced in the premium, and it needs to leave a fair value gap, right? These are the three rules to any valid POI. And so from here, our POI is going to be the last candle before the fair value gap. So I get a lot of questions about how I mark out my POIs. POIs are fundamentally different to fair value gaps. However, they're very, very closely linked. And the main difference between a POI is essentially a POI has three rules to them, which is what you can see on your screen, right? We need to break structure. So we've broken structure like this. We've had price breaking over here. We're in a premium, so we're above the 50% area. And most importantly, we've left a fair value gap. The fair value gap is the most important concept because we know as a trader, the market gravitates towards two areas. Anyone who's traded ICT understands the market gravitates towards two areas, right? The market will gravitate towards liquidity and fair value gaps. And so we have a fair value gap over here. We have a second fair value gap over here. We also have a ton of liquidity over here, trendline liquidity, internal range liquidity, whatever you want to call it. The market will gravitate towards these two types of areas, fair value gaps and liquidity. And so from here now, if we continue to play price on a little bit, we can see how price attempted to head higher before we had the ultimate breaker structure to the downside. And so from here now, we need to understand a couple of things, right? Let's clear up the charts and see what I mean. So if we go to most recent price action, we can see the same thing, but from a bullish perspective. And so from here now, the way that I would again start off by looking at structure, the most important thing is structure. Our market structure is as follows, right? We